Good morning, everyone. We have is the virtual digital assets. Why again in news? Because our finance minister, she has announced a 30% tax on the income. Those people have income from the virtual digital assets. Virtual. The opposite of virtual is real, right? One is virtual, one is real, and these are digital assets. And when we say virtual digital assets, basically we mean cryptocurrencies. I hope every one of you have heard regarding crypto. We have Ethereum, we have Bitcoin, we have Libra, right? Libra, very, very important. So these are some of the cryptocurrencies, and of course crypto. So when we call about virtual digital assets could be anything. It does not only means cryptocurrency or something. It means any digital currency, anything that is virtual, that you are not using any coin, that you are not using any note. Okay, so the payment that we are creating through the Google Pay, through Phone Pay, or through net banking, the money is getting transferred. So is it also a kind of virtual? It's also a virtual media, right? It's also a kind of virtual media, but government has done a clear border, right? So regarding the tax, 30% tax will be collected only from cryptocurrencies, and you can also refer cryptocurrencies as decentralized finance. Okay, and NFTs. Now NFTs are starting to get very much important. From these, the government will take tax, but the government will not take any tax from the people who are saving, who are investing on digital gold, or who are investing on central bank digital currency, CBDC. Now India is also talking about a CBDC, central bank digital currency, isn't it? And the name is digital rupee. Have you heard about it? Digital rupee. It's a central bank digital currency. So just like that, every country could have their own central bank digital currency. So if there is any income, source of income from CBDC, the government is not going to charge any tax out of it, or any other traditional digital assets. So here, this is excluded, exempted these people. Now, one is that CBDC, one is cryptocurrency. Any idea what is the difference between crypto? What is CBDC? Difference, clear difference. So basically, if you see, both cryptocurrency and CBDC, if you see, both will be run with the help of a technology called as blockchain. Please be clear. Both will be running with the help of a technology called as blockchain technology. Now, blockchain is the future of us. Today, blockchain could be, today this word might be something unusual for us. Blockchain, what is blockchain? How blockchain is doing all this? But trust me, there was a time when the term internet, when the term web was also something very much unknown for us. So in this way, blockchain is also in that stage, and blockchain is the future of tomorrow. Anyway, coming back, crypto and CBDC, if you see, both will run with the help of blockchain technology. Here, crypto is public blockchain. Remember, crypto is public blockchain technology, but CBDC is private blockchain technology. Remember, one is public, one is private. Okay, this is decentralized. That means no any authority is present in regarding regulations of cryptocurrency. Everyone has the everyone can check into the details, right? And CBDC, as you can see the name central bank, it has authority. It has authority of the central bank of their own country. And in case of our country, we will have the RBI. Am I right? We will have the RBI in case of digital rupee. Right. So one is decentralized, one will be regulated by RBI in case of digital rupee, or in case of the other countries, it could be their own central bank. So what is the problem with central bank regulated currencies? When it is regulated with an authority, there is a chance that the RBI, in case of us, it's the most powerful one. Yes, it is regulating. If requires, it can create create surplus amount of money. If there is surplus amount of money among the public, there will be the major the rich, yeah, the rich section of the people. This rich section of the people will try to gain the money if there is surplus amount of money, because rich has the ability, right? Rich has the ability, so it can result into inflation, isn't it? It can result into inflation. So the poor will remain poor, the rich will become richer. So this is the major disadvantages of the case when it is regulated with the help of central bank. Is it clear, everyone? Have you understood what I'm saying? Yes? Okay. Now, on the contrary, if there is no such problem, if there is no such authority, higher authority, it could be a person, it could be any organization, it could be any institution in case of this. If there is no such authority, imagine every public has the authority, every public can check the ledger, every public could check the transactions done. It's a decentralized method, so it's a public one. So these method, both of them will run with the help of the blockchain technology, but this one will be public, where everyone can check regarding the transaction. You can check how the values are, how everything is taking place. But in case of this, only one authority will have only one institution will have the authority. Is it clear regarding the clear difference between both of them? And apart from that, think about Bitcoin. You can invest, you can buy Bitcoin, right? And then you can sell Bitcoin as well, right? If the values increases, you can buy Bitcoin, you can sell Bitcoin. But in case of CBDC, central bank digital currency, this is not the case. This is not the case. You will not be able to buy it, you will not be able to sell it, because you are under the regulation of that particular country. And if the value increases, it will increase. If the value comes down, it will come down. So it has its total own thing. But crypto is not that case. You can just invest your money in crypto. Okay, so regarding this, so therefore the government of India, you can see, although regulation of cryptocurrency, initially it was said that we are not going to accept cryptocurrency, but indirectly our government is trying to accept crypto and trying to charge tax. Of course, this is not a very good news for those richer sections, right? Because they were having a good income. Now if they have to give 30% of it as a tax, this is of course not a good news. And very important, NFTs, non-fungible tokens. I told you regarding NFTs, right? I told you what is NFT. Any idea? If you remember, see, suppose there is any form of digitalized image. I'm talking about digital images in the form of JPG or PNG format, or any kind of digital video, any kind of digital audio, right? All this digitalized images, videos, audios, normally there is something, if you say digital art, isn't it? Some of the things, or they have some authority. If you want that authority, If you want that authority, this authority you can claim with the help of NFT, non-fungible token. Non-fungible, when we use the term non-fungible, this entire thing is made of two words. One is token. Token is nothing, but it's a kind of currency, digital currency, and one is non-fungible. You can use the term replaceable as well, or you can say non-fungible token or non-replaceable token. Any form of digital art, imagine that form of art if it's non-replaceable. Suppose I am having this particular thing. Okay, suppose imagine this is a book. Okay, this book I can get thousands and thousands of copies. I can sell it and everyone can grab this book. Am I right? Everyone, although this is not a book, I'm just showing you. Everyone can grab this book and get this book, isn't it? So it's a kind of public thing. It does not have much of the authority. But if I here use some kind of marks, if I use my own sticky notes, if I write some kind of notes in this, so this book will be more easy for you to read. Am I right? This book will be more easy if I am using my underlining part, highlighting part, my own sticky note. I will write that these are important. It will save your time. That original book which was having so many copies, now if I write something, this is only one piece, unique piece, which you will not get anywhere in the world. This is a unique piece and I could sell this book at a higher amount if I want, because you won't get this piece of book anywhere. So same thing, same concept if you apply in case of digital media, that one unique piece, if you want to buy and sell, that is not replaceable anyhow. If I want, of course, if I am a rich person, I might have some kind of fantasies of claiming, of getting authority over some of the things. So I will try to get it, and this is just something like auction. Okay, the values can keep on increasing. The more I can pay, I will have the ability to grab it. So that is non-fungible token, and non-fungible token operates with the help of crypto.